This week, older homeowners are getting hammered by loan rejections and skyrocketing homeowners insurance premiums in these states.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. On this show, we have warned repeatedly of the coming credit crunch, and now consumers are beginning to feel its impact. Just as mariners would batten down the hatches when the ship was about to enter rough seas, lending institutions are aggressively moving to reduce their risk exposure to bad loans, that amid concerns of a looming economic recession. In the wake of one of the Federal Reserve Bank's most aggressive rate hike cycles, large banks such as JP Chase, Wells Fargo, and Citigroup are setting aside more money to absorb an expected influx of bad consumer debt. It then comes as no surprise that the Federal Reserve's survey of consumer expectations found that the overall rejection rate for credit applications jumped to 21.8% in June, up substantially from 17.3% in February. Considering these circumstances, older homeowners that are seeking to refinance their existing mortgage or purchase a new home could find their loan application denied. In fact, the Fed survey found a 29.6% probability that home mortgage refinance applications would be rejected and a staggering 46% probability of a traditional mortgage application facing the same fate. Do retirees need access to more cash than before? There is a strong case to be made for answering yes, for two reasons. First, while somewhat moderated, inflation remains a persistent burden for Americans, especially those living on a fixed income. Much of that pain can be found in the Core Consumer Price Index, or CPI, which measures the change in the price of goods and services while excluding more volatile prices for food and energy. The core CPI has been especially sticky, while general or headline inflation has dropped more significantly since last June thanks to lower energy prices. The property insurance disaster is another factor. Another reason that many retirees have an increased need for access to cash is the implosion of affordable or accessible homeowners insurance. Florida has not only seen a record number of new residents arrive, but natural disasters. Consequently, AAA, Farmers Insurance, and several lesser-known insurers have joined the growing list of companies that will no longer sell or renew policies in the Sunshine State. In an emailed statement to CBS, AAA said, "Unfortunately, Florida's insurance market has become challenging in recent years. Last year's catastrophic hurricane season contributed to an unprecedented rise in reinsurance rates, making it more costly for companies to operate. Over 100,000 Floridians will be impacted by the Farmers Insurance exit alone. However, Florida is not alone, with both Allstate and State Farm announcing that they will no longer accept applications for property or casualty policies in the state of California, citing increased wildfire risk and high construction costs. Even those seniors who may qualify for a mortgage today could find that their payments become especially onerous, not only because of higher interest rates, but the massive increases in homeowners insurance premiums for those policies that are renewed, and those are typically built into a mortgage escrow payment. And even worse, homeowners who cannot obtain or afford insurance could find themselves in a default of their mortgage loan agreement and subsequently face foreclosure. Older homeowners in Florida and California may find themselves being hammered by both a lack of access to credit and surging home insurance premiums. Now, perhaps a reverse mortgage could be a lifeline to provide the means of continuing to age in place in these most uncertain times. Now, what are your thoughts? Leave your comments in the comment section below. And if you'd be so kind as to share this week's video, you can do that on LinkedIn and Facebook. I want to say thank you in advance. And don't forget, We have a YouTube channel where you can subscribe and hit that notification bell. That way you're notified every time a new episode comes out. Sometimes we have early releases. And each and every week you can catch up on the most recent reverse mortgage news with our weekly podcast, Heck World Weekly. We're now on Spotify, and you can also listen and subscribe on iTunes. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at Heck World.